Welcome back, finance enthusiasts. Ready to dig into some juicy details about Deere Company, the powerhouse behind those iconic green machines? Let's get to the dirt on D, and trust me, these numbers are as impressive as a well-plowed field. First up, we've got the P ratios. For the trailing 12 months, Deere's price-to-earnings ratio is a solid 11.88. Now, compare that to their average over the last 5 years, which sits at 19.08. What does this tell us? Well, Deere's looking pretty undervalued right now based on its historical performance. Looking forward, the forward P ratio is 14.91. Still, quite a bit lower than the past average. Seems like investors are being cautious, but maybe they're missing out on a golden opportunity. Now, let's talk about the price-to-earnings to growth ratio. Or rather, let's not, because it's unavailable. Deere's expected to see negative growth in the next 5 years, which makes this metric a no-show. Insider ownership is sitting at 7.26%. That's right, folks. The people who know the company best have a decent chunk of skin in the game. And check out these juicy returns. Return on equity is a staggering 42.01%. That's some serious profitability. Return on assets is at 9.28%, and return on invested capital comes in at 18.48%. Deere's definitely making the most of its resources. Earnings per share or EPS is a hefty 33.21, but hold your horses, over the next 5 years, EPS is expected to dip by -6.80%. Why? Could be those negative growth expectations we mentioned. Looking back at EPS over the past 9 years, it's a tale of 2 eras. From 2014 to 2020, flat as a pancake. But post-2020? Boom! EPS skyrocketed, giving us a compound annual growth rate of 16.8%. Free cash flow per share? Now, that's been a wild ride. Very inconsistent over the past decade, yet it's managed a compound annual growth rate of 23.09%. Impressive, right? Dividends, anyone? Deere's yield is 1.49%, and they've grown those dividends by 10.51% annually over the last 10 years. That's some serious growth. Operating margin is sitting at a high 25.91%, but keep in mind, during industry downturns, it can drop to around 15%. Same story with the profit margin, currently 16.15%, but it can dip to 10% when times get tough. Margins matter, especially when predicting future earnings. Revenue and earnings over the last 8 years? It's been a very positive evolution. And guess what? Deere's total return has outpaced the VOO in the last 5 years. That's some green in the green. Now for some debt talk. Debt/EBITDA ratio is 3.63, and debt/free cash flow? A whopping 12.90. That's a lot of leverage. And for me, with this level of debt, I wouldn't even consider including this company on my watch list, but this depends on the risk that each person wants to tolerate. How about the average price return over the last 52 weeks? 8.75%. Not too shabby. Deere's market cap is a massive $115.25 billion, making them the second largest company in the industry just below Caterpillar. Finally, analysts are predicting the price to hit $423.03 in the next 12 months, up from the current $394.43. That's an upside of 7.25%. But here's the kicker. My fair value estimate for Deere is $303.58. Way below both the current price and analyst predictions, suggesting potential overvaluation. Triangular flag. So, there you have it. Deere Company is a powerhouse with some impressive metrics and a few red flags. Whether you're bullish or bearish, it's a stock worth watching. If you enjoyed the video, don't forget to like, share, and subscribe for more financial adventures. Until next time, happy investing!